Is Canada's housing market headed for a crash? The world knows Canada for its politeness, saying the word A. But lately, it's become infamous for its skyrocketing property prices, record high debt. In this video, we will dive into the factors that have led Canada's real estate market to this critical point and discuss what the future might hold. Hi, this is Harji Sidhu, realtor, civil engineer and construction professional in Canada. Welcome to my YouTube channel. Today we are taking a deep dive into Canadian housing market, exploring the factors driving the prices to unprecedented heights and why it's a topic of concern. We will break down critical aspects of Canada's real estate market crisis, also go through historical resilience of the market and current state of Canadian real estate, demand and supply imbalance, government policies, the impact of low interest rates and unique mortgage quirks. We will also explore why the mortgage bubble hasn't burst yet. During 2008 financial crisis, Canada's housing market demonstrated remarkable resilience compared to United States. United States, rising interest rates combined with unsustainable lending practices caused mortgage delinquencies to surge, resulting in substantial drop in house prices, contributed to one of the most severe economic downturns in US history. Just north of the border in Canada, the situation was considerably less dramatic. Despite Canada's strong economic ties to US, the house prices fell by only 9.2%, I think, from the peak in 2008. In contrast, in US it almost took a decade to recover the lost value, while Canadian properties regained their lost ground within just 2 years. The resilience of Canadian housing market during the 2008 crisis can be attributed to several key factors like sound mortgage lending practices, with Canada's market being dominated by large, well-capitalized and diversified players who were closely monitored in their investment banking and mortgage lending activities by the regulators. This resilience have, however, double-edged sword. While the US experienced a real correction in real estate prices during the crisis, making properties more affordable and over a period of time, while in Canada that might have not taken place. Even after accounting the recent dip in prices, the Canadian home prices almost doubled in the last decade, while the percentage increase in wages during the same period of time only accounted for 24%. As a result, an average homeowner in Canada, if you need to buy about house for $750,000, the approximate income that you would need would be around $180,000, while the median family income in Canada sits at $121,000, putting home ownership out of reach for many Canadians. This affordability crisis is very acute in cities like Toronto and Vancouver, where the prices in Toronto has almost reached over $1.1 million on an average. The same for Vancouver is over $1.2 million if you look at the average medium house price. One of the key factors driving Canada's housing crisis is severe imbalance between demand and supply. If we compare the data, Canada has lowest housing supply per capita among G7 nations, which is only 424 units per thousand people. The federal agency estimates that the Canada would need approximately 5.8 million new homes to restore affordability by 2030, which is almost 2.5 times the target that Canada is on track to complete. But just building more homes isn't as straightforward as it sounds. There's shortage of skilled labor in construction industry, a record 80,000 vacancies in the field. It takes about 8 to 10 years from acquiring undeveloped land to constructing a property in Toronto. Additionally, zoning restrictions imposed by municipalities also make it incredibly difficult to densify the land in major Canadian cities like Toronto. The government has implemented various measures to address housing affordability. The government has tried several approaches to address housing affordability, such as announcing tax-free savings account for first-time home buyers, imposing bans on foreign buyers, and introducing even vacancy rates at federal, provincial, municipal levels. In some cases, there has been increased attention on zoning restrictions in some Canadian cities as well. However, building more homes is not as simple as it seems, as I earlier said, because there has been meaningful roadblocks to that objective. Even when properties are available for purchase, prices can be very high due to zoning of those properties. Low interest rates have played significant role in Canada's real estate frenzy. Following the 2008 financial crisis, many central banks, including Bank of Canada, dropped interest rates to almost near zero, leading to stimulating lending activity. As a result, mortgages became incredibly affordable while fixed income investments offered lower yields. If we look at that way, this led to influx of investment capital into real estate market and investors capitalizing on cheap debt to buy properties and rent them out for additional income, and appreciation became very attractive investment option. However, this phenomena is not unique to Canada. Similar asset price inflation occurred in US as well due to low interest rates. Canada, as we talked earlier, did not experience real estate correction for an extended period even after 2008. As Canada's housing market grapples with high record debt and soaring property prices, there's a looming question. Is Canada's housing bubble about to explode? In the near term, the rate hikes imposed by Bank of Canada could lead to widespread deleveraging, with the demand for properties, especially from investors, falling, resulting in declining prices and severe financial implications for the country. On the other hand, if the inflation continues to decrease, there is a chance, seeing the progress, the Bank of Canada may consider cutting the rates to alleviate pressure on the buyers. Lenders are actively reaching out to borrowers to ease the contract terms and extend amortization periods. Debt-laden home buyers may weather the storm. Nevertheless, the situation is already causing hardships for many Canadians, and we might see some distressed properties for sale as well. In the face of Canada's housing market challenges, what can you, as a prospective home buyer or current homeowner, do to navigate these turbulent waters? If you are considering buying a home, especially your first property, focus on affordability and risk tolerance rather than potential financial gains. I totally believe real estate is very lucrative investment, but you must ensure that you can afford the payments that you are committing to. When determining affordability, housing costs should not exceed 32% of your average before tax monthly income. Remember that. For those unable to afford properties in densely populated areas, consider investing in less populated regions like, for example, Toronto guys. Hey, you guys can explore Kitchener-Waterloo area. Call me. Or Alternatively, you can invest your money in other assets to continue growing your wealth while waiting for more favorable conditions. Or you can also invest in investment trusts like REITs, and they would also expose you to significant real estate investments. If you're currently experiencing financial strain due to a mortgage, consult a professional. Whether it's a financial advisor or a mortgage agent, they can help you decide whether to sell the property or hold the turmoil. Remember, none of this is to suggest that dealing with the housing market situation will be easy. As we wrap up exploration of Canada's housing market crisis, it's important to note that the future of Canadian real estate market is still uncertain. Whether the market continues to march forward, experience a significant correction, or it's crucial for Canadians to make informed decisions when it comes to real estate. Thank you for joining me on this journey through Canada's housing market turmoil. If you find this video informative, please consider liking and subscribing to my channel. Your support would really be greatly appreciated. Give me a like, subscribe to the channel. If you have any questions about real estate, about anything to do with construction, give me a shout and have a nice day.